Hello, this is Dan Perkins with Money in Motion video blog, and thanks for watching. We've got a lot of things to cover today, some I think you'll find interesting. First, let's deal with our three keys to the market. As you recall, our keys are what's happening to the price of crude oil, what's happening to the price of gold, and what's happening to the rate of interest on the 10-year and the 30-year Treasury bonds. So let's look at oil first. So as you can see from this chart, oil is traded between about 97 and 106. Its most recent spike to the 106 level, I believe, is a function because of all the unrest in Iraq. It is amazing to me that how quickly these terrorists have taken over the country, most of the country, and are marching towards Baghdad. They captured a bank that had over $400 million in cash. And they've claimed that they're on their way to Baghdad. If they get Baghdad, they will have a Muslim terrorist country, assuming that they continue to call it Iraq. And I will look for them to spread out to Syria and perhaps Jordan. So as long as that pressure is going to be there, I would expect to see oil prices continue to rise as you have unrest in the Middle East. So now let's look at our second component, and that is gold. There are pundits out there today who are suggesting that gold will reach $2,000 by the end of this year, and silver will reach $50 an ounce. We are under $1,300. We had a brief move above $1,300 and an immediate sell-off. I think there's perhaps even more downside because the news from Europe is not positive. The European Central Bank last week lowered interest rates to 15 basis points, and now the depositor at the Bundesbank is going to now have to pay money to put money on deposit. So if you put money in a Bundesbank in the equivalent to our Federal Reserve deposit account, you're going to lose money. The European Central Bank is concerned about the inability of the European economy to recover, and so if one of the largest economies is not growing, I don't see how gold is going to continue to rise. While oil is reacting to the fear, gold is reacting to the lack of inflation or the concern in many parts of the world about deflation. So I don't expect to see gold to trade much above $13.25, $13.50 between now and the end of the year, unless we have a major financial crisis. Our last component, and that is treasuries, the 10-year and the 30-year. The 10-year is about 2.6, and the 30-year is about 3.6. So we have interest rates at the low end, and I don't see any pressure because the economy actually contracted in the first quarter, minus 1%. Some pundits are saying that it'll grow at 4% annualized rate in the second quarter, but the news that seems to be coming in makes that a little suspect. So if the economy's not growing, unemployment is holding in the 6.3 level, but really it's much higher than that because of the people who've given up looking for work. I would expect the Fed to continue their cutting back on their purchases and maybe be out of the market of buying mortgages and bonds by the end of the year. I don't think that the absence of the Fed buying will add any pressure, so I don't see any significant movement in the 10-year or the 30-year. Now I want to talk briefly about three of our core holdings: Hanley Capital Management, Mankind, and Gilead Health Sciences. Let's deal with Hanley first. This low interest rate environment with stable interest rates is going to be favorable. Hanley's about, not counting dividend, about 18% on a year-to-date basis. Dividend is running somewhere around 10%, almost 11%. If spreads continue to stay the way they are and the Fed comes out of the market so that the spread will widen between treasuries and mortgages, I would expect to see the possibility of an increase in dividend from Hanley later in the year. Now, as it relates to Gilead, still under a lot of volatility, people concerned about the price of $84,000. There are really dozens of drug therapies that don't create a cure, that cost the Medicare system and the private insurers many, many, many times the cost of the hepatitis C drug from Gilead. We are coming into the end of the second quarter. I would expect to have earnings reported probably around the 20th to the 25th of July for the second quarter. And I would sincerely expect that earnings in the second quarter, as it relates to both their core business and their hepatitis C drug, to be above first quarter. The street is looking for a good number, but I think they're going to get a blowout number as the markets begin to expand. Keep in mind that in the case of the hepatitis C drug, we're still finishing up trials in Japan, one of the largest markets in the world. And so it's still rolling out and could be on track for in excess of $10 billion of sales this year, regardless of what's going on in the United States. Mankind, our other biotechnology company, which is in the insulin dispensing business with their new Afrenza and their puffer dispenser, has a very important date on the 15th of July at the federal, with the Food and Drug Administration, on getting their final approval on the drug. People are waiting and writing a lot of commentary about what's going on with Mankind. Mankind is probably the best performing stock in the portfolio in the last 30 days. It's up 71%. And as a result of that and a lot of movement in a lot of the stocks in our portfolios, we had a phenomenal May, and we're starting off pretty good compared to the market in June. Going back to Mankind, a lot of discussion, a lot of pros and cons about what's going to happen, if they're going to have a partner, when they're going to have a partner, is the FDA going to approve or not. That's causes fairly wide swings in the market of the stock, could be 5-6% a day. I believe that they're going to get their approval, and I believe shortly after they have their approval, they're going to announce a major strategic partnership for distribution. Whether it will, as some pundits are saying, sell off after they get the approval, don't know. But I do like the prospects of this very much longer term, so if there was a sell-off in the 7 level, I probably would add more to the position. So that's our three talking about was something that I saw a couple of nights ago on television, which caused me to immediately go to the internet and see what was going on. Pennzoil ran a commercial here in New York for their new Pennzoil Platinum motor oil. What's significant about this motor oil is it's made entirely from natural gas. No crude oil whatsoever. If you go to the Pennzoil.com website, you can see how they make this oil, which is better for the engines, less wear and tear, more efficiency, a better product out of natural gas. Pennzoil is owned by Royal Dutch Shell, and they've built this technology. And as I saw that, I know that there's this facility being built in Louisiana to convert natural gas to diesel fuel. But I'm wondering if it's possible to convert all that wonderful American natural gas, which we're now the leader of the world in production, into creating gasoline. If it's possible, we could get rid of our dependence on the Middle East very quickly. So we had a good May. We're off to a pretty good start in June. And we're way ahead of the markets on a year-to-date basis. So if you have any questions, please feel free to give me a call. And if you have friends or family or neighbors who are looking for a real money manager, please feel free to give my name and number. This is Dan Perkins. Thanks for watching.